Hi, fellow traders. Yes, it is earnings season. It seems like I've been waiting a whole year for this to happen. Earnings season, my favorite time of the year. It's the the month and a half where most of the stocks or most of the S&P 500 report their earnings. That's where I make the most of my money. The other times, we're just kind of marking time. Yeah, every now and then we do get some really nice moves. The market works in our favor and we do really well. So we still make money during the during off season. But earnings season is where the rubber meets the road for me. Now, this is going to be a very special season because I have no idea how the market conditions are going to affect the earnings. We've already seen that most of these companies are pulling their guidance. Guidance is what makes the stocks move, not whether they beat on earnings, whether they beat on revenue or lost on earnings or lost on revenue. The market, as you know, moves in anticipation of where the stock's going to be 6 to 8 months from now. And that's where the guidance comes in. It lets us know what's going on in the company, where do they see themselves 6 to 8 months down the road, what's coming, what's good that they have. And now everybody's like, well, we don't know what's going to happen. I guess it's going to depend on how long this pandemic lasts and how long things get back to normal. Well, guess what? Nothing's ever going to go back the way it was. It's just not. Things are different now. Whether we want to believe it or not, things are going to be different. But I think it's going to be better. We're going to be smarter. And that's going to help us grow and kind of take our society to a new level. So I'm not saying that in a bad way. But we just don't know how this is going to react. And we've already seen a couple of trades that I've taken already. The one that we took yesterday and the one that we took today. It's hard to comprehend how this thing is gonna turn out. But it's starting to ramp up. We still make money. It's just right now it just seems kind of limited to how much we're gonna make. But it's earnings season, and I'm happy, and I'm excited, and I'm ready to continue getting to work. Okay, one of the things that I really push, and this is a book that I recommended probably a year ago. One of the members brought it up yesterday. It is an incredible book because what we have to do as traders is we have to create good habits. There's a lot of habits that we have that we need to get. We can't actually get rid of them, but we can replace those habits with good habits that's more powerful and that's more relevant to what we're doing. And one of the things that the book talks about is that small wins are a steady application of a small advantage. What the thing is, small wins fuel transformative change by taking those small advantages that we get in the patterns, and it convinces us that we have the ability to achieve bigger things. It's like we're starting here, we're doing really good with what we're working on. It's on a smaller scale, but that continues to grow. It's like a snowball effect. It's just like we're growing our account. It starts small. If you go back and go back and look at my account, because I started uploading everything to Profitly. Way back when the very first person I started following was Tim Sykes. He was the only one out there all over the place at the time. So we all know how that ended for me, but I still use Profitly for like several years. And you'll see where I downloaded my trades. And there were days where I made $30, $50, $15, $75. I had a series of small wins for a long time. But what that did was it built up, it fueled my desire to keep going. It's like, look, I'm doing it small here, but as I grow, I'm gonna be able to do it on a larger scale. But you got to start small. You have to, because there are a lot of different things that you have to change. And that's why I have everybody start out doing that exercise. It's a really, really simple exercise, but it's designed to help you develop the habit of just following a generic mechanical trade plan every day without fail. So when the stock triggers, you don't think about anything else but entering as soon as it triggers. When it hits your profit target or your stop, the only thing you're thinking about is taking it off there. That's it. Nothing else. You don't worry about that, because you have to develop the habit of trading your plan every day and not letting anything else affect the way you think about it or stop you from taking it. All right, so something so simple can cause so much pain and anguish and grief. I mean, I get cursed out sometimes because of what it takes you through. It's designed to do that. It's supposed to do that, so that you come out on the other end of that month knowing and experiencing 90% of the emotions that you're going to have to deal with when you actually start going live and start trading your trade plans. And once you get through it, it's a big transformation. Now, most traders don't get through it. They don't make it through it, and they never become consistently profitable. That's just a fact. But the ones that do understand, they realize after a while, they realize why they're doing what they're doing, because it helps them develop ways of dealing with the bad habits that they brought into trading, and that comes about when you start trading. And I mentioned some of these the other day, but these fears can develop habits. The fear of missing out, the fear of being wrong, the fear of losing money, and yes, the fear of success. There are people who actually fear success. They cannot believe or trust that any success they have is sustainable. And subconsciously, they will break down what they built because they fear success. They fear being right. And it's real. It's a real phenomenon. If you don't believe me, look it up. And I deal with that with students. When I was teaching high school, that's one of the things that I had to work with, students who feared being successful because it took them out of their comfort zone. And that's very real. I mean, I even dealt with that personally, so I know it's real. Revenge trading, though, you can develop that bad habit. And then having unrealistic expectations. You cannot eliminate these. These are going to be present throughout your entire trading career. But what you do when these bad habits that you have must be replaced with the correct habits. Habits that are going to be stronger and that are going to translate into your success. And that's what we work on doing, is removing these bad habits from your vocabulary. You can't they're not going to disappear. They're always going to be in the back of your mind. I mean, I deal with them to this day. I deal with unrealistic expectations, as you know. I deal with revenge trading. I do have, sometimes if I've lost 3 or 4 days in a row, I start worrying about being wrong. Because I have so many people watching me. These things are real, but we develop the right habits, good habits, that take the place of these bad habits and push them aside so that we don't deal with these on a regular basis. So developing the right habits are good. I mean, it's imperative that we do that. All right, so let's go. Well, let's take a look at yesterday. I didn't get to do a recap yesterday. It got late and I couldn't stay awake, so I just said we'll just do this today. But I got chopped up like a salad yesterday. We had the big candle right here on Roku at the open. Huge candle. I don't like these candles because it kind of takes up all the trading range I had in mind and just completely throws my trade plan out the window. And so what I decided to do was just wait for it to, set itself back up. So we had the little pullback here, which could be considered a bull flag or whatever. And I was sitting here just kind of waiting. I said, I'm going to be patient and I'm going to give it a good, ample time to test this VWAP and the 9 and the 20 if it needed to, whatever, and get it. So here was the bounce. I guess I could have got in. If you think about it, I could have gotten in here. But I ended up waiting for the next candle to print and got in right above this candle. It went up a little bit and then it sold off. Now, either way, if I got in on this candle, I probably wouldn't have been stopped out here. But so having a little bit late entry ended up allowing me to get stopped out. Now, I couldn't let it test the 9 because I was so far away from it. Plus, I was aggressive in my share size. I've gotten in the habit of being too aggressive with my share size. And so when I have to stick to my max loss, it's oftentimes right on a level of support or resistance that I need to allow to be tested. So getting in a little bit heavy here is what caused this failure. Then I get back in saying, hey, it's going to bounce. Because when I got in, this was a solid green candle. And I got in, and damn if it didn't turn around and go. But it held a 9 this time. And then this candle just washed out, hit my max loss again, and I was done. And I just kind of sat back and waited, and it held the 9. I mean, it could not, it kept dipping below the 9, but it held it. So this time I felt confident that we could go. And I was willing to risk a little bit more in order to give it opportunity to test. So I got in. We got the big move up. This candle hit my first target. I was feeling good because this was strong. And it was over the high day right here. So I was feeling pretty good. We got that profit. And then it came all the way back in and stopped me out break even. And after that, I was done. It was lunchtime. I had some mentor sessions to do. So I was like, I'll just wait and we'll see what happens the rest of the day. But that was it. Mentally, even after lunch, mentally, I just wasn't there. I was just ready for the day to come. I know we had one watch yesterday that was on earnings, but it wasn't nothing major. But I was just waiting for the day to happen so things could start rolling for me. So we ended. Yeah, that was the trade yesterday. The trades from yesterday just got chopped up like a salad. Now we got to earnings. Oh, you see, we lost 523.06 yesterday. So we got into earnings yesterday, and IBM was reporting. This is a really nice tech stock. And I was looking for it to gap up. These stocks, the tech stocks, I really believe they should be increasing in value during this time. Even though people are home, technology, all of these tech companies should be looking at how can we increase our presence in the home now. Because this is opening a door for more people to be able to work from home going forward. Companies are realizing that the less office space they have to pay for, the more profit they're going to make. So allowing people to work from home, to work remotely, is going to be a bigger option for businesses now. At least that's my opinion. And, I've heard other people talk about it too. So these tech companies, I really feel, should be looking at exploding going forward. But right out of the blue, these guys are right along with the rhetoric. They pulled guidance. When they announced earnings, they pulled guidance, and it kind of messed me up. So, and it didn't really work. So I sent the email, and I sent you the information you needed to look at. So this is IBM. I actually took it in Thinkorswim. I'm trying to continue to grow this account and continue to learn how to use it, because this has been a wasted resource for years. And I've always used their charting and everything else, but I never really traded. And because I knew day trading was not good. I knew that from the beginning, that momentum day trading just does not fit this platform. And people are seeing it now, especially when they went to zero commissions. But I want to use this. Trading pre-market, trading aftermarket, this platform is awesome. Plus, TD Ameritrade, you could trade SPY 24/7. Now, I should have caught that 3-point move last night. But it just so happens I had gotten up 5 minutes to go take a shower and missed it. But those are the opportunities that this platform possesses. So I'm going to be using it a lot more. But I got in looking for the bounce, hit my first target, but then it came screaming back, and I had to bail on it. Got out right here. As it came back, we just couldn't do anything. No, I'm sorry. This isn't where I got out. I got out right here on this candle as we were coming back. So we were sitting here watching it, and this thing just kept making lower lows, and it had no push left in it. It just got heavier and heavier and heavier. So I shorted it. We were talking about how to short, how you had to take aftermarket trades in this, having to use extended hours, and you had to use a limit order and all of that. And so we got in, and we got the breakdown. When the conference call kicked in, we had our first target, second target here on the daily 20, which is this solid blue line. And I should have taken some off at 115. I was getting a little bit greedy and didn't. And I was like, well, I'll wait to see if we reject. But once we started claiming all of this, and it really didn't look like we were going to roll back over, I just went ahead and killed the last piece. But this is 100% what can happen if your earnings trade goes wrong. Yeah, we booked some profit on the bounce, not a whole lot, because the pop-up failed and we came back in pretty quick, but we were able to catch some profit, and then we caught the actual move and ended up with 641.50 on just on this trade. So really nice profit going into the close, and it was kind of stress-free outside of this, but we all know what we need to do. We have a plan going in, we take it, we do what we need to do, and we just let the market do the work. Let the market deal with the stress. All right, so that was yesterday. Today, we looked at Roku again, and I decided to just wait. And I waited. So we let the opening range break down, really nice trade, and let it bounce. Once it rejected and we got below everything, again, I was patient. I got in on the break of the low of the rejection candle here, and we were back under the opening range low. So everything was in order on this trade. So we got in, first target, second target. This was a daily level. This was the previous low. This was another daily level. This was the 200. I had no idea we were going to sell all the way off another 4 points. 6 points. Had no idea we were going to drop 6 points from the 200. Honestly, I thought this was going to bounce off the daily 200. This is a daily 200. I was looking for a bounce, a rejection, and then I could get back in and go. So I just let it worked itself out. It put in a bottom, and we couldn't push the 9. So on the break of the 9, on the rejection of the 9, I got in for more trend continuation, looking for the low here as my first target, or a target, but I was thinking 119 would be a good midway point. But as soon as it got down, this next candle started printing, and you could see the buying pressure completely made a shift in momentum, and we took it off. And I was telling you this as it was happening. So this shouldn't have been a surprise to anybody. I was telling you exactly what I was looking at, and you could see it right on the chart as to what this was doing. And I took it off, because if I didn't, I would have stopped out for a healthy loss. And we don't like that. It's not what we want. So that was a pretty decent trade there. Then we get into earnings. TXN was on the watch today. And here's another tech stock that I was thinking should give us a long. This should bounce. These guys should be all over what's going on now, and being right there to help support all of us that are stuck home, that are working from home now, going to school from home. These tech companies should be all over trying to do things to help support us and what we have to do. So I'm looking at going long again. You can see we've been kind of grinding up. Here's a pullback. And typically when you see this pullback going into earnings day, we're going to get a gap up. So got earnings here. I didn't get a chance to, it's a long story, but I didn't get a chance to switch over to accounts. So I had to take this in the account that I had up. I don't typically trade earnings in this account. This is for the small account trades, trying to help show you guys how you can grow your small account, trading smaller share size, trading some little bit higher priced, lower risk trades, lower risk stocks. So I try not to do the higher risk strategies in this account. But I didn't really have a choice today because I was going to miss out. It was already like 3:59 and I had to do something. So again, I was looking long on this. So I get in short. It did just what I like to see. It sold off going into the close. Let me see. I need to try to move this because you need to see the volume. That's what's important here. All right, so you see we had increased volume, increased selling volume as we were going into the close. This is what I want to see if I'm going to go long. I really want to see the selling coming in hard. I mean, really, it's really nice when it sells off all day and then going into the close, you got everybody getting short. And I'm waiting for the rip. And that's exactly what happened. I got in the second candle, the candle right at the close, ripped. I was able to get it at my first target up here. It took a minute to get to 111, but we got there around the daily, not the daily, but the 200 on the 5-minute chart. I thought that was a pretty good window. I was looking for 113 next, but it turned around, came all the way back in, and then I just took it off. Now, it since tried to bounce, but it's back below 108 again. It didn't quite do anything else. So again, it's one of these companies where it should have gapped up, it should have bounced based on everything that I saw. And that's another thing. Just because we go through all of this and we feel that it should do something, that doesn't mean it's going to do it. But if you can build enough evidence to support your thesis, you should have an edge. You have an edge over somebody who just looks at something and says, ooh, I think it's going to do this, or ooh, I think it's going to do that. So I have an edge. And you can see the stock, in both cases, the stock wanted to go up. That's the direction it was going to go. But the company reports something and it just throws everybody off. Stop pulling your guidance. Let this thing go. But still made a decent amount on it. We got 507.29 on it. And then Roku today, we did really good, 488.68. We're only trading 300 shares. This is not, not big time. We're only trading 300 shares. So, small account growth at its best. That's what it is. And like I said, we're coming into earnings. This is the time of the year that I love. This is the time of year that we can make money. And you always want to put money in the bank because you're going to go through those slow periods. The last month for me was really slow. I'm glad I banked everything the first couple of months because I wasn't sitting around crying about a stimulus check, waiting on something to help me pay my bills. What makes me feel even better is that we were in a position where we don't even get a stimulus check. We don't even qualify. So that tells me, we're heading in the right direction. We just need to keep going in that direction. And I have to keep building on it and keep developing the best habits. And that's what it's all about. And anybody can do it. Anybody can do it. Somebody that has dyslexia and dyscalculia can come in and do what I do every day. If I can do it, anybody can do it. It's just a matter of learning the right way, developing the right habits, and just doing it every day, executing it every day. without fail. That's all it takes. So that's going to wrap it up for me today. I got 2 days worth of stuff in, so it's about twice as long. But you may not hear from me until Friday again. So give you something to listen to over the next 3 days. So you guys have a great night. And I will see you first thing in the morning.